They want you to prepare an August 31st balance sheet for Tech Today. Be sure to list assets and liabilities in order of their liquidity. And that just means in order of how you could turn them into cash the quickest, in order that you could turn them into cash the quickest. So, omit dollar signs, and here we go. All this information is from this trial balance. We're going to do the first thing, which would be assets, liabilities, owner's equity, and our first and most liquid account, of course, is cash, 8540. Then we've got accounts receivable, 1860, 18,600 rather. Then we got office supplies, which would be 3390. Then land of 51,000. Office equipment would be 19,000. And you know, probably you probably need to flip these two around. Probably office equipment should come first, and then land, probably. Anyway, you'll see whenever you have it graded. You then want to go on down to add these up, get a total of 100,530, and our liabilities will be accounts payable of 22,670. And then we've got the July 31st, notice the July 31st capital balance. We're preparing a balance sheet for 8/31, so really this was the beginning capital balance. Keep that in mind for August. Then we have withdrawals, we have consulting fees earned, we have some rent expense, salaries, telephone, miscellaneous, and other investments, owner investments rather. Let's see. I'll show you two ways to do the final thing, which you've probably seen this before, but we've got capital account. It's going to be the ending capital account for as of 8/31 is going to be 77,860. Two ways to get that number. One way is to prepare from this trial balance an income statement. You have revenues, which we have up here, minus salary expense, minus rent expense, minus telephone expense, minus miscellaneous expense. Add all these expenses up, get a total expense of 13,640. Subtract that from your revenues of 15,100 and come up with a net income of 14,60. So you prepare an income statement. Then you'd prepare a statement of owner's equity. So you start with the July 31st, which is really the same thing as the August the 1st capital balance. Add the owner investment of $78,000 from up here. Also add the net income that we just figured in this income statement, 1460, and subtract out the owner's withdrawals of 4,400 down here, and you get an ending capital balance of 77,860. You can do that if you want to, and I don't have a problem with that. Do it out on a scratch piece of paper, do an income statement, do a statement of owner's equity, or take the old shortcut. If you know the assets total as of 8/31, and you know the accounts payable total, or in this case the only liabilities we have as of 8/31, you can subtract the two and come out with the owner's equity balance, which is the same thing as going through these two statements, 77,860. You decide. I report, you decide. We're done.